Voice of Super, the podcast for the super industry, by the super industry, exploring issues and concerns of the super sector. And for those broader in the super sector, it's an incredibly important topic and sector for us. I'm Mary Delahunty. I'm the CEO of ASFA, and I'm delighted to be joined today by the outgoing CEO of the Australian Banking Association and former Premier of Queensland, Anna Bligh. Welcome to our podcast.
Hi, Mary. Great to be with you.
So, Anna, it's quite a milestone. You're finishing up at the ABA, and we were sort of revisiting over your tenure of time there, thinking about the difference between when you came into that role and now as you're leaving. Have you got some broad reflections over your time that you'd like to share with the super sector?
Sure. It's been an incredible 8 years. Probably the industry's gone through more major events and change in that time than possibly at any other time in its history. Banking generally is kind of slow, conservative, and incremental, but the world is changing much more rapidly than that. So, yes, when I reflect on the circumstances in which I agreed to take the role, the industry was on the front page for all the wrong reasons. Bill Shorten, who was leader of the opposition at the time, was calling for a royal commission. The public was, the public was very disappointed with some of the services they were getting and the experiences that they were having. And the political heat and the attention on the industry was extreme for, well understood reasons. We've been through a royal commission, come out of a royal commission, embarked on the whole project of earning back the trust that is so imperative. I think really to any corporation and to government, but when you're working with people's money, trust is, I think, an absolute, top of the list must have. And if you lose that, then regaining it has to be a very, very conscious effort. Then, of course, COVID came along. There's been lots of those and lots of changes of government during that time, or changes of leadership in, federal parliament. But if I take one step back from all of those events, I think the other thing that's really been happening in the last decade has been a massive disruption in how people do their banking and what they expect of their banks. Increasingly, banks are technology companies. Overwhelmingly, customers now do their banking digitally. And that presents a whole raft of, change and disruption and innovation. And, some people find that easier to cope with than others.
So let's go back to that issue of trust, because I think I also want to talk about the disruption too, but because I think the same things in super. There's a couple of themes there. And for me, coming into association land, I watch what the ABA does and think that I think this is renowned throughout Australia, as an organisation, carry yourselves very well and help your members very well and very well trusted by your members. But you're also carrying, as you said, the trust of them towards the Australian public as well. What sort of lines can you draw between that and superannuation at the moment?
Well, I think trust, I often say trust arrives on a tortoise and it leaves on a galloping horse. You can take years of building up good reputation and solid trust, and then with, just one or two big mistakes, it can all be gone, literally in a matter of days. And so it's a very precious thing, and you have to, I think, be mindful of it all the time. You can't take your eye off it. You can't put your feet up and say, that's done. It's got to be something that's top of mind all the time. I think, when I think about trust in the financial sector, there are different kinds of trust. So what I would call prudential trust, that is, if I give you my money, will it still be there when I come back tomorrow? Do you have all of the right settings to make sure that my money is being properly looked after? And I think that's true in the super sector as well. Possibly even more true in the super sector because it's compulsory. People don't make a choice. It is compulsorily taken out of their salary. And so they really need to know that, I think, when they retire or need it and are entitled to it, that it's still going to be there. Secondly, what I might call information trust. financial services, people regard, after something like their health data, they often regard their financial data as, deeply confidential, very personal. How much money you've got, what you spend it on. Banks and superannuation funds hold a lot of very confidential information about people, including about their health, including in the case of super, potentially, but also just things like their address and their contact details. So if people want to feel that if you're holding that very personal data, that they can trust you, not to lose it, not to do the wrong thing with it. And then what I might call conduct trust, and that is, if I get into trouble, or if I need something from my bank or my super fund, can I trust you to do the right thing by me? If I need to claim on an insurance product, if I need to claim on my income protection because I've had a cancer diagnosis, can I really trust you to put me first? And I think it was really for banks, I think it was that third one that they lost. I think Australians, even in the middle of the Royal Commission, they weren't rushing out, taking their money out of the bank and putting it in a suitcase under the bed. They didn't lose prudential or information trust, but that kind of conduct trust, if you like. And that really goes to reputation. And it's, and I think that there are lots of parallels there for super. I often say to my members, as bad as that was, imagine if you had also lost the trust of the public about keeping their personal information confidential, or we had banks actually collapsing, so people didn't trust the Australian banking system. If you lose those two, then you've really lost the banking system. And I think the same is true in super. I mean, if you had a super fund collapse, you would have Australians very, very nervous about where's my money.
And so really this is now just a therapy session for me. How do you get that how do you get the tortoise to walk back in again on that trust issue? There's a good role for associations there. But it's got to be in concert with your members, doesn't it? And how did you sort of face into that at the ABA?
I think, look, a couple of things. One, it's absolutely imperative when you're making improvements, which after the Royal Commission, every single bank was, and we were also doing things where appropriate collectively. So we completely rewrote the banking code of practice, which is it's a rule book for banks that goes over and above, what's set out in legislation. And it does go a lot to how we will treat you if you're in trouble, etc. And so we completely rewrote that, and we used that we advertised, we had a big campaign to let Australians know that, okay, we're climbing back. And one of the first things we're doing is changing the rules for ourselves and really putting investment into communicating that. I always say to my members, you can't communicate your way out of a problem that you behaved your way into. I think one of the CEOs of one of our major banks, sort of in the very early days after the Royal Commission was asked about how would people know that the lessons had been learnt. And he just said, it's a very simple thing, but he just said, don't judge me by what I say, judge me by my actions. And that became a bit of a catch cry around the table. Okay, is this the right way to act? Is how you want people to judge you? I think the other thing that can be quite difficult to navigate at times is, obviously an industry association is it's a public face for the industry as a whole, as opposed to particular brands, and it's a spokesperson for industry-wide issues. But I think you're a more credible voice if I don't think it's always the role to immediately defend. If something is wrong, actually saying, look, the industry's got this one wrong and we're going to fix it, and this is what we're going to do to fix it. I mean, I think if you kind of always defend things, particularly if you ask yourself the question, is this really what we should be doing for customers? And if the answer to that is no, then say it. And I think that's one of the things that gives an industry association credibility. And it's easier for the association, I think, to say it about an industry than say a CEO to say it about their own brand, because they've got investors and shareholders and pressures. And but I think it's very powerful It's like when you get it wrong yourself and you say to your partner, "Oh, I got that wrong. I'm really sorry. I'm going to fix it."
Yeah.
It's that
Yeah.
simple, but it can be hard to do. Particularly,
Yes.
your members feel like they're paying you. They're not paying you to criticize them. And so, we've had several very hard conversations. The Royal Commission issued an interim report, and it
Yes.
had some really shocking things in it. And on the day of that report, I did a press conference and said it was a day of shame for Australian banks. And not all of my members thought that was great. A number of them did,
Yeah.
though.
Understood.
A number of them
Yeah.
defended it and said, actually, when you get it this wrong, you've got to say it. You've got to call it.
Mm. Yeah, it's a fine line. So let's go to digital disruption, because I thought those comments that you mentioned earlier, again, sort of some lines to be drawn between what the banking sector's gone through and what super may face. And so preparedness for that sort of disruption. Do you think the banking sector saw the changes that have been so rapid in the way in which, look, those of us who basically don't carry cash around anymore are now sort of doing commerce? Did you see it coming as a sector?
Yes, but what we didn't see was COVID, and COVID massively accelerated a trend that was already happening. But the trend was happening quite gradually. It was all going in one direction. There were fewer and fewer people coming into branches because overwhelmingly what most people go into branches for most of the time is putting cash in or taking cash out. And so if you're not using cash, you're not doing that anymore. Um, fewer and fewer people using cash. So there's, it making that's making the cash in, transit system, the armored vehicles that drive cash around the country, that's really undermining the commercial viability of that business. But we still need it. So yes, I think at the beginning of COVID, I remember someone saying to me, this is going to change everything. It's going to change everything. And in many ways, certainly in banking, it just turbocharged these trends in ways that, when people started, you can actually see the data, the number of people during those 2 years of COVID who switched from using a plastic card at an ATM or at a shop to using their mobile phone and a wallet. And, um, I think it went up by something like more than 8,000% in about 18 months, and once you do that, once you're paying, buying your fruit and vegetables with your phone, people don't go back to plastic.
No, absolutely.
Um,
And the other thing we've had to keep up with really rapidly, and the banking sector has had to do this in front of other financial services companies, is cyber attacks, which are getting increasingly more sophisticated. And recently, superannuation has been, at the forefront of that, albeit um, with banking as well. So, what can you tell us about what the banking sector faces every day in terms of defending Australia's savings from cyber criminals?
yes, I think both sectors are very, very vulnerable to this. They're very lucrative. They've got, you know, Australia's super sector holds massive, reserves. So does the Australian banking sector. Look, I don't have the number right off the top of my head, but I know that literally every single day, Australian banks are, repelling literally millions of attacks are being stopped every single day. I know one major bank, for example, has more than 500 people in its financial fraud team. And they're 24/7 operators these days, and they're operating, globally, as indeed, customers of both super and banks, you know, they're traveling, they're living overseas, so there's lots of points of vulnerability. Look, I think it's not that long ago that my correspondence or my interaction with my superannuation fund was all done on paper. And as that digital world, as people shift there really quickly, I think there's a lot of imperatives. Safety is obviously sort of number one. I want you to keep me safe, but also I want it fast. I want it now. I'm not going to wait till I get my statement next month. I want to be on my app. I want to go in and have a look right now. And I mean, it's interesting because unlike banking, people go into their banking app and they use their bank every single day. So if something's going wrong in your account, you see it. hang on, you know, where's the money that was there yesterday? So if you've been hacked, you can see it. Often, and the bank may not know until you tell them that was not a transaction I made. Whereas with super, there's a lot of set and forget. And with the recent cyber issues, I went in to have a look at my super account, and I was actually really pleasantly surprised to see how easy it was to use, how easy the site was to navigate. I mean, it's not an app; it was a website, but I was able to quickly get into my account. My password worked. I could immediately find my balance, and look at. And so, I think big tick. But the expectations of customers, and I have to say, I'm with one of the larger superannuation funds. I don't know if that what I've just said would be true of some of the very small funds. It's certainly the case that in banking, and our smaller banks have been very public about this, the need to continue to invest and the size of the investment that's needed in technology, firstly for safety, but secondly for speed and access and convenience, and meeting customer expectations. People get less and less tolerance, particularly younger customers, for anything that's clunky, anything that's slow. And I think you've got to be very careful about not trading off safety for speed. And that's always a challenge.
Well, that's perfect to hear. I'm glad that your super fund has delighted you with the app. I imagine you might be drawing upon it more and more as you step out of this role. It's been such a great opportunity to spend some time with you as you reflect across that enormous contribution that you've made to the banking sector, backed in by an enormous contribution that you made to the state of Queensland and to the rest of us in Australia as well. Thanks so much for joining us today, Anna Bligh.
My pleasure, Mary, and good luck with all your opportunities and challenges.
Thank you.